Hello everyone. Now we will do a sample journal entry problem, and this is from your textbook chapter 18 problem number 42. So let's read the problem. The University of Danville is a private not-for-profit university, and they also mentioned that current year their net assets is 700,000, and that includes 400,000 unrestricted, 200,000 temporarily restricted, and 100,000 permanently restricted. Now you need to record these journal entries. Well, the problem also asks to see how those assets are changed, but for our practice purposes to do and for your exam purpose, we will focus only on those journal entries. So let's start. So first journal entry, number A, says that the university charged students 1.2 million in tuitions. That means they are charging their students their tuition fees, and as you see the Sacred Heart example and few other examples, tuition is the major revenue source for a private not-for-profit university. So if you need to record it, definitely you will record their tuition revenues, but they are not receiving the cash right away, so we will record it as a tuition receivables. So the journal entry will be tuition receivables debit which is 1.2 million, or if you want to write all the numbers, it's 1,200,000, that debit, and we will credit tuition revenues. Now, let's read the second entry. Second entry says that they received a donation of investment that had cost the owner 100,000, but it was worth 300,000 at the time of the gift. According to the gift's term, the university must hold the investment forever, but can spend the dividends for any purpose. Any change in the value of this security must be held forever and cannot be spent. That means they received a donation, which could be some sort of physical assets or investment, but the donor's condition is that that investment must be held forever. That means that will be a part of their permanently restricted net assets. So they have to debit investments and they have to credit permanently restricted net assets, and this permanently restricted portion is increasing because of this gift or contribution. And remember, whenever you record investments or any type of gift which is in a form of physical assets, plant, property, equipment, land, you have to record as per their fair value. So we're going to record this investment as per the fair value, which is $300,000. So we will debit investment and we will also increase our net assets, but since the donor restricted the imposed the restrictions, we will call it its permanently restricted net assets, and of course it is coming from a contribution, so we'll also define that. So investment debit, which is according to the fair value, I'm repeating, investment or any type of physical assets, land, property, equipment, PP&E, if you receive as a donation and gift, you have to record as per the fair value. So investment will be 300,000 debit, and we will credit permanently restricted net assets. I'm writing NA. NA means net assets, and you can also classify it because of the contribution. So we will write it also here, contribution, and the value will be as per the fair value. Now number C, it says that received a cash donation 700,000 that must be used to acquire laboratory equipment. They received cash, which is simple, cash is increasing, and that is the that will be considered as temporarily restricted because donor imposed the condition that fund will be used to acquire laboratory equipment. It is not restricted forever, but they can use it only for this condition, laboratory equipment. So it's a temporarily restricted portion. Again, they are receiving it as a donation, so we will categorize it as a contribution. So we will debit cash and we will credit temporarily restricted net assets. And I will also categorize it as a contribution. So if you remember, your accounting for contribution, any type of gifts or donation or even pledge, we categorize under contribution. So I'll write it down. It's a contribution, and here we will put the amount. It's $700,000. Now, let's see number D. Number D, it says that gave scholarship in the amount of $100,000 to the students. So basically, they gave scholarship as a financial aid, right? And that will be deducted from the tuition, right? So although we recorded the tuition revenues, but the scholarship is kind of considered as a discount. You can compare it for a for-profit company, say for example sales and sales discount. So this scholarship will affect the amount of tuition they are receiving. So currently we recorded tuition receivable here, so we have to reduce this receivable because the scholarship portion we will not able to collect it or receive it, and on the other hand we will debit scholarships and aids. This is one kind of expense which is actually reducing their tuition revenues. So I'll write it down. It's financial aid or scholarship. You can also write it down, scholarship, debit, and you have to reduce your tuition receivables. So you have to credit tuition receivables. So the amount here, they gave the scholarship $100,000. So we will record or debit scholarship or financial aid $100,000, and we will also reduce a portion of our tuition receivables. Number E, the paid salary expenses $310,000 in cash, which is very straightforward. You're gonna record or debit salary expense, and you have to credit cash. Cash is reducing, and that is 310 debit, 310 credit. Now let's see the next one, number F. They learned that a tenured faculty member is contributing his services in teaching for this year and will not accept his $80,000 salary. That means a faculty which is tenured, who is actually teaching, and he is providing his service, and theoretically the university is incurring the salaries expense, but they are not giving you any cash. Rather, he is contributing his service because he says that he will not receive or accept these $80,000 salaries. So it's basically one sort of contribution. The professor or the employee is making contribution to the university through his service. So what we're gonna do, since the university received his teaching services, so they need to record the expense. That means they are incurring the salaries expense. They need to debit salaries expense, but since they are not paying cash, so it will be considered as a contributed service, and definitely that will be through unrestricted net assets. So I am trying to fit it here. So we're gonna debit salaries expense, salary expense, and we are not paying cash, so we will credit contributed service, and it is actually through their unrestricted net assets. And you can also categorize it, it's contributed service. And the amount is here 80,000. Now let's do the next one, number G. Number G said that the university spent 200,000 of the money in C on laboratory equipment. No time restriction is assumed on this equipment. So let's go back to C. So in C, you see that they received the donation, and the condition that the donor imposed is that that will be used to acquire laboratory equipment. Now they are purchasing the laboratory equipment. So we need to record that. So one general journal entry that you know that if they purchase equipment, definitely equipment will be debited, and they're spending $200,000, so cash will be credited. But remember one thing is that actually the fund is coming from the temporarily restricted net assets, because this fund we actually recorded as temporarily restricted fund because of this donor's condition. Now we are using it to buy that equipment. So one additional entry you need to do is to reclassify your net asset portions. That means we will show that our temporarily restricted net assets is reduced, and we are taking it in as a unrestricted net assets. After this reclassification, we're gonna use those amount to purchase the equipment, because basically unrestricted net assets is the portion that we use for our general operation purposes, for regular expenses, but here the fund is coming from the temporarily restricted assets. But before showing it as the purchase the equipment, we will actually reclassify it. We will reclassify from temporarily to unrestricted. That means for a moment temporarily restricted fund is actually reduced, and that is for increasing the restricted net assets, and then later we are actually spending it. So we have to do one additional entry for the reclassification. So number G, here we have to record the regular journal entry, which is they are purchasing the equipment, which is equipment debit, and they are paying cash credit, and the amount is $200,000. So we're gonna debit 200,000, we will credit 200,000, but at the same time we will show the reclassification entry. There is no specific order. You can do the reclassification entry first and then do the equipment purchase. So for the reclassification, it is actually reducing their temporarily restricted assets, net assets, and it is increasing their unrestricted portion of the net assets. So we will actually debit temporarily restricted net assets, temporarily restricted net assets, and we need to write a little bit about the categories why we are debiting it, because we are taking out a portion of temporarily restricted net assets, which the net asset is actually decreasing, so we debited that, and the reason is for reclassification. So I'll also write down a little note next to it, which is reclassification. Now we are taking out that fund from the temporarily restricted to unrestricted. So in one sense, for a moment, it is actually increasing the unrestricted net assets, and then definitely we are spending it to buy the equipment. So we will credit unrestricted net assets, and again we'll put a little note, and this is because of this reclassification, and the amount is here the same 200,000 debit, and 200,000 credit. Now let's do the next one. Number 8, they learned that at the end of the year, the investment in B are owed 330,000. So in B, we recorded an investment, we recorded as per the fair value. The value was 300,000. Now it increased 30,000. So it's very regular journal entry that you probably did in your intermediate course, that your investment value is increasing and you are not selling the investment. You cannot, because there is a donor restriction that you have to hold it forever. But we need to show this incremental value, and we usually record it as a gain, but this is not a realized gain. We will call it unrealized gain on investment. And the condition was that if you have any gain, this will also be held forever. That means this increasing portion, which is increasing our investment value, will also be considered as a permanently restricted fund, restricted net assets. So here, if we need to do this journal entry number 8, investment is increasing, so we will debit investment. And then we have to credit our unrealized gain on investment. So we will do that. Unrealized gain on investment. And that's only the incremental part, which is 30,000. But remember, this portion will also be considered as a permanently restricted portion, because this incremental value you have to hold forever. So I'll write it down: permanently restricted net assets. Now here we will do next one, number I. They received dividend $9,000 cash on this investment. So remember, the condition was that you will hold the investment forever. Even the value, if the value of the investment will go up, also that would be considered as a permanent portion, and that will be held forever. But if you make any earnings, or if that means if you receive any dividend, this dividend can be spent for any purposes. That means they are now receiving dividend, so this dividend will be considered as an unrestricted part. There is no condition on that, and the university can spend it for any purposes. So now if I do number I entry, they are receiving here dividend, cash dividend, so cash will be debited. And here dividend revenues will be credited. And we will consider it as a part of our unrestricted net assets. So we also need to record that one. That means the university can use this dividend for any purposes, and the amount is $9,000. Now let's do a few more entries. I'll just show you the problem picture again. Now the next one, we will do number J. Number J is depreciation. The computed depreciation expense for the period $32,000. It's a straightforward. We'll just debit depreciation expense, and we'll credit accumulated depreciation. And the amount is given here, $32,000. Now the next one, number K. The school's board of trustees decided to set aside $100,000 of previously unrestricted cash for the future purchase of library book. Well, it apparently seems that they are kind of saving $100,000 for purchasing the books, it apparently seems kind of temporarily restricted. But remember, this is not the restriction from any donor. This is basically internal board designated funds, and this is the decision by the board, which is kind of university's internal thing. That's why we cannot call it creation of any temporarily restricted portions. Rather, you have to remember, if we have anything board designated restrictions or board designated decisions, all will be considered as unrestricted. That means they are actually taking a portion from unrestricted net assets, and they are kind of keeping it aside for purchasing the books. So this is the decision by the board of trustee. All will be within unrestricted net assets. So basically there will be ultimately no change, but still we will record it. So in one sense, we are receiving cash from an unrestricted portion, and again we are moving out that cash for purchasing those books. So cash is debited, but I don't want to classify it for any category, but you can also call it, it's kind of internally restricted, and we will also credit cash. Basically there is no change. The cash amount is still within the university and everything is within this, their unrestricted portions. So we will just debit cash and credit cash, and we will also mention it, it's internally restricted portions, and the amount is $100,000. Remember, board designated restrictions or any internal board designated funds, those are always considered as unrestricted. But donor restricted funds, either we have to classify as a temporarily restricted or permanently restricted, because the restrictions are coming from external, from the donors. Well, now when we'll see the recent changes, and one of the major change that FASB made just to simplify this classification, and from this year they have to make only two classification. One is net assets without restrictions, another is net assets with restrictions. So with restrictions, we don't need to classify is it either as permanently or temporarily. But here, since the textbook is doing the examples and we are classifying the restrictions part either as permanently or temporarily, so we'll practice few problems given here. Now number L. Number L says that they received an unconditional promise $10,000, which the school fully expects to collect in 3 years, although the present value is only $7,000. The school assumes that the money cannot be used until the school receives it. So they received a promise. So it is one kind of pledge, right? And this is unconditional. Remember, in type of gift, donation, pledge, all we will consider as contribution, right? So this is, we will call it's a pledge and we are going to receive it, so we'll call it pledge receivables. And remember, we have to record it as per the present value. Although the promise is $10,000, but today we don't know actually what is it, but the value of this promise or unconditional promise that the university expects to collect is $7,000. So we will record it as 7,000, and we cannot use the money here until the school received it. So it's also a temporary restriction. The school will receive it and then the school will use the money. So what we're gonna do, we will debit pledge receivables, and again we'll record it as per current value or present value, which is $7,000, and we will show it as a part of our temporarily restricted portion. So we will credit temporarily restricted net assets, and this is a contribution. Remember, the accounting for contribution in type of gift, donations, pledge. Well, for pledge you have conditional, unconditional. This is unconditional, very straightforward. We'll also note it and categorize it as a contribution. which is $7,000. Now, number M. Number M says that they received an art object as a gift that is worth $70,000. Well, if you remember from your reading from the chapter or from the PowerPoint slides, that if any nonprofit organization receives any type of art or historical treasure, you should not record it, because basically we actually don't know the value sometimes, and that will actually give no like financial benefits. That's the argument. So there was a huge debate whether a not-for-profit entity receives an art or any historical treasure, whether they should record it or not. So the argument here is that sometimes you may not measure the value. Say for example, you receive Da Vinci's an art piece, you really don't know what's the value. Second, most of the cases you will see that not-for-profit entities will receive any financial benefit from there. So donation of any type of artwork, those are actually not recognized, but you can disclose it. Yes, disclosure is required. You have to disclose it in your footnote. So for next one, number M, we basically have no entry. Here you will see that university also mentions they will not record the gift. Yes, they actually use the arguments that it will not give any financial benefits. The next one, number N, they paid utilities and other general expenses. Number N, it's very straightforward, utilities and other expenses debit. And they are paying cash. The amount is $12,000. So you have to debit that expense, you have to credit cash. The next one, they received free service from alumni who come to campus each week and put books on the shelves in the library. Over the course of the year, the school would have paid $1,000 or $3,000 to have this work done. Now remember, sometimes anyone or one of your employee or anyone could give you some voluntary service. Now you have to check whether this voluntary service requires a specialized skills or not. If you think that this type of voluntary service does not require any skills, specialized skills, then you should not record it. Although the university is receiving service, right? The person, the alumni is working for the university to reorganize the books in the library, so it's one type of service the university is receiving, but this does not require any specialized skills, so you don't need to record it. If you see that anyone is doing any voluntary service but it requires a specific skills, then definitely you have to record it. For example, one of the CPA alumni, if the alumni says that, okay, I'm gonna do your accounting or auditing with free of charge, that type of voluntary service requires a specialized skills, so you have to record that. But now this time it does not require any skills, so you don't need to record it. So you'll just write it's no entry. So that's it, number 42. So please practice these journal entries, and of course the journal entries from the textbook chapter, because on exam 2 you will have few journal entry problems.